Welcome to this week's edition of Lender Chat. I am so happy to introduce you to Christina Beitler. She is a mortgage lender. She's excellent at what she does. She comes highly recommended. She is on my lender list. And today we're going to kind of backtrack what we've talked about the last 2 weeks with the projections of a rate cut. It doesn't sound like Jerome Powell is willing to do that at all with the jobs report that just came out. So Christina is much better at explaining that. And also, she's got some great private loan programs that you need to know about. So I'm just going to let her take it away.
Yay! Hi, everyone. It's very great to meet you. And if you see a weird little shadow in the background, those are my furry coworkers keeping me company today. But yes, unfortunately, bad news. No Federal Reserve rate cut in the near future. And truly and honestly, I don't think it's going to happen in 2025. And really, I think that at this point, we just need to focus on the good news that rates are stable. And what that means is, we take a buyer shopping and you'd quote a rate and you'd bring them back with a contract, and I'd have a 0.25% higher rate just over the weekend. We're not seeing that anymore. People have this great position now that you could talk to your lender, say, I'm going shopping. And when you come to us on Monday with that beautiful contract, there's no more surprises.
Nice.
There's no more shocks coming in. Yeah. So yes, there's no Fed rate cut coming up, but the market has stabilized. It's calmed down. We're not seeing these big swings like we saw in the past that was causing a lot of anxiety for our buyers and even our sellers out there for sure.
Well, even as a listing agent, when I call the lender, when I get a contract to find out, okay, you've got this rate in your letter from 2 months ago. What is it today?
Right.
So,
And the thing was, even then, is you could say, what was your rate this morning? And then what is your rate this afternoon? That's how volatile that the markets had gotten. And gratefully, we stopped seeing that. So with that, that's going to ease up the buying process. It's not going to put so much stress, and it's actually going to invite buyers to get back out there and feel remotivated now that there's more listings than ever. So it's really a good time to take that leap, because those that are waiting for this magic drop, I'd stop waiting.
yeah.
I would just get out there and then start investing in your wealth for sure.
Well, and like we've been talking about, this is a great time to buy because prices have come down. Sellers are getting used to offering concessions to help you buy your rate down. And once these rates do come down, we're going to have more buyers enter the market, and supply and demand means that those prices are going to start going up, especially once we start seeing all those multiple offers.
Well, it's definitely psychology. There's people say there's a magic number, right? What is that magic number in the market? And a lot of big companies, a lot of big banks, a lot of marketing research companies have done their data pooling, they've done their surveys, and they're trying to figure out what that magic number is. And we're not too far from it. It's a high 5, low 6. And rates right now are in the mid 6s. So we're not far off the mark to where a lot of people are just waiting for that brief glimpse of hope, and they're going to start coming out in droves. So if you can find that right house and know in the back of your mind there's always that opportunity to refinance,
Mhm.
you can get ahead of the curve, because sellers are going to know when rates improve, hey, I have more power because there's more buyers, right? So if sellers are willing to come to the table for the first time in years, and you and I've been doing this for a long time, I haven't seen this, and oh my goodness, since probably 2018, when sellers actually were giving concessions.
Yeah.
The fact that that's even a conversation, that's awesome. Like, take advantage of that, because that could go away like that.
Yeah.
And any lower interest rate environment will definitely strip your power of that for sure.
Yeah. So you were telling me that you've got some private programs that definitely have an advantage over some of the grant programs like TSHAC and TCA. I get the
THC, yeah, it's
THC.
a
I get the
mouthful.
acronyms mixed up.
Okay, in mortgage and real estate, we love our acronyms. Well, and that's the thing is, interesting fact too, is that a lot of buyers, especially first-time home buyers, think you have to have at minimum 10%. And that's what NAR's survey says. Completely false.
Yeah.
You only need to have anywhere from 3 to 3.5, and there are programs to help you get there.
Mhm.
So with that, traditionally, you have THCA, which is a Texas-based program, and TDHCA, again, another Texas-based program. They're great opportunities, but they have some downsides. One of those is once it's gone, it's gone. So meaning they have a big old pot of money. Once that money's used up, there's no more money to give. The other downside too with those programs is you can't refinance them for 3 years. So once you use them, you're stuck with that mortgage for 3 years. You cannot refinance it. And there's some type of, it's not necessarily a prepayment penalty, but you have to pay them back a percentage of what they gave you. So there are some strong stipulations that go with that. And so that's not very attractive because people don't want to be beholden to an interest rate for 3 years, right? If rates improve in the next year, we want to refi.
Exactly.
So,
and that's what we're expecting. So,
and I believe it. I think, Jerome Powell's leaving by May of 2026. And so with the new Fed president coming in, they know exactly what the entire US wants is lower interest rates. So I think they're going to be a little more motivated to meet that than the current, as you could say, power that be in the Federal Reserve. And so there will be opportunities. Will there be threes and twos? No. Is there possibilities of that mid to high fives? I think it's possible, right? So because of that limitation at 3 years, MPA, the brokerage company that I work with, we kind of did some research to see what grant programs or down payment assistance programs were out there that could bridge that gap, right? Give you the monies to cover your down payment anywhere from 3 to 5%, but not lock you in for 3 years. Give you that flexibility to refinance at a later date. So we do have some grant programs. They're called our Elevate grant programs through some of our investors, where you can receive up to 3 to 5% of the purchase price, and you don't have to be a first-time home buyer. It's for anyone. So great opportunity for sure.
So how do those programs, are there income limitations or anything like that?
So there are some income limitations if you're not a first-time home buyer. So if this is your second home, but maybe you were upside down on the house before, or it didn't bring as much equity because you bought in the height of the market, there are some limitations. The max income for all borrowers is $220,000 a year.
Not bad.
So it's healthy.
Yeah.
But if you're a first-time home buyer, there's no limitations.
Oh, okay.
And for our first-time responders and our teachers, no limitations whether they're a first-time home buyer or not a first-time home buyer.
Our heroes.
Mm-hmm.
That's good. Now, I've heard of heroes programs. Are there any other advantages for our, medical first responders, all that?
Sure. There are some unique programs that are related to assistance, whether that's down payment or closing cost coverage. There are also some investors we work with that give interest rate benefits to those specific employment positions. Primarily, interest rate benefits are, I guess you could say, centered around our first responders. So like our firefighters, our police officers, our nurses, things like that. Those are the ones that get those types of benefits out there traditionally.
All right, guys, give Christina a call if you have any questions, if you're out there looking, especially if you're a first-time home buyer. And like she said, if your difference in what you bought and what you're able to sell it for, your equity's not where you would like to have it, give her a call, talk to her. Again, we've said this before, you just need to have a conversation, be upfront about everything, and let these lenders do their job, because there are a wealth of information and experience. Same thing with your realtor. You've got to be upfront with us about everything. And, we're a team. So let's think of it as a team and, work together to get you into a home.
Absolutely. It's all about that initial consultation. Don't wait. Don't try and self-guide or Google. Talk to the experts. And, each of us are an expert on different sides of the process, the lending side, and then working with realtors really working on the front end because that's their area of expertise. You do need both to truly guide you through that process. So it's good to have a great team and don't wait. If your picture's still a year out, it makes sense to talk now because maybe you're not ready and let us help guide you to be ready and stay in touch with you to make sure you're on the right track for
That is
sure.
an excellent point because you can go ahead and have some preliminary work done so that you know, okay, this is exactly what we're going to need to save up. This is what we need to pay off so that we can bring our debt to income ratio down to get a better interest rate. I mean, having that conversation in advance. If you're serious, you've been saving and you're getting close to pulling the plug, have that conversation now.
Absolutely. Yeah. And on the other side with the realtor is if you're unsure of like, oh, I really want to be in this neighborhood, but if you don't talk to an agent, you're not going to know what does it mean to be in that neighborhood? What are the price points? What are the property tax rates? What are the schools like? You until you have those conversations with someone who's an expert, once you have them, you may figure out that's not the right neighborhood for you, right? And so you're might have been wasted energy or a wasted dream. So it's better to ask those questions sooner than later.
Well, and there are a couple of big points to what you just said. As far as schools go, there are some neighborhoods, like my old neighborhood, Wells Branch. Half the neighborhood is Round Rock ISD. They have two elementary schools. Half the neighborhood is Pflugerville and things that you want to look for. So, do you have five kids? Three of them are teenagers. So, you've got five cars you need to park. Well, you can't go to Terra Vista because they will not allow you to park on the street overnight. It's in their HOA rules. Do you have a funny little pot-belly pig that's part of the family? There are some HOAs that will restrict them because they consider them farm animals. So that's why having those conversations in advance so that you can start doing your research and we can send you reports from our realtor property resource that gives you information about the neighborhoods. It's not going to give you the
Absolutely.
HOA docs, but knowing that information, I know a lot of the neighborhoods that some of those things apply to. So,
Absolutely. Yeah.
and I know how to write the contract to protect you if you have a potbelly pig and we weren't able to find out in advance. So,
Hey, we need Wilbur with the family.
oh, yes, we do. All right. Don't forget to like, subscribe, and share, especially if you know somebody that is thinking about buying a house. This series, we've got some great information in the whole series. I think this is episode 16 or 17. I can't remember now. But so check it out. Christina's information is going to be on the last slide. But Christina, would you like to give us your phone number?
Yes, you can reach me directly via phone or text at 512-689-8083. Look forward to helping you guys.
Thank you. And my number is 512-925-5309. And we hope you have a fantastic weekend.
Bye,
Bye.
y'all.